More than money, it's about empowerment. Welcome to MSI Wealth Chronicles. Today, we're going to talk about the best way to improve your credit score. Jesse, do you want to start us off and tell the listeners the best way to improve their credit score?
The number one way to improve your credit score really comes down to paying your bills on time. Paying all your open active accounts. A lot of people think that, I just missed one thing. I'm going to be a little late here. I'll pay this one. And those lates, I have actually heard 2 or 3 lates to be called a score killer, that it could total your score.
Yep. And I agree. Like, listen to this. I remember a long time ago, I don't know, maybe 95, 94, I got in a little hardship. And I was going to have to pay my vehicle late, with Bank of America.
Right.
That's who financed my vehicle loan. And anyways, I thought in my head, because I didn't know how credit worked, I thought in my head, I've never paid late. I've had it for, 24 months and never paid late. There's no way one late payment could affect my credit score.
Right.
I paid late 23 months. I'm only going to pay late once. It won't hurt me at all. And the lack of knowledge, oh man, was I wrong? You're absolutely right. It killed my scores. My scores dropped right at 100 points from making one late payment, and I had never paid late, before on my vehicle. So yeah, I agree with you. Payment history, and can you tell the listeners why payment history is so important?
Sure, absolutely. So what you have to realize is that your payment history is really your adult report card, right? This is what they see about you, and it's 35% of your overall score. Yes. I want you to realize that's a third. If you miss one payment, you're affecting a third of your overall score. And the more of those you get, the worse that's going to be. 1, 2, like you said, you cost you 100 points. At the time, you probably had a little bit thinner of a file, right? You had just a couple of credit items.
Yes.
If you have a great overall credit history, it may only drop you 30 or 40. Now, if you sit down and think about it, that's a lot. Anyway, so really the reason those late pays kill you is and they call it slow pay. Did you know that?
Yes.
They look in a credit report and they see that, they call it slow pay. They worry about whether or not you pay things on time. So it's going to knock you down every time.
Yep. But I agree 100%. 35% of our score comes from payment history. That means if you pay your bills on time, it's going to help you out a lot.
Absolutely.
If you don't pay your bills on time, that's going to be a negative payment history, and it's going to affect your credit score dramatically at a rate of 35%. So, yeah, that's what I would tell all of our listeners is if you want to improve your credit scores, step number 1 is make sure you're paying all your active bills on time. If you're not there yet, get them caught up, okay? If you're already there, then you could take step number 2, which step number 2 is if you have any negative payment history marks on your credit report,
right?
Now we know how much they're affecting us, right? They're affecting us at a rate of 35%.
35%.
So do whatever possible to try to get those deleted. And that's exactly what MSI Credit Solutions specializes in. We specializing in disputing the derogatory items that appear on our clients' credit reports that is affecting their credit score dramatically, right? We look to see if there's any inaccuracies on how it's reporting. And when we find inaccuracies, what happens? Those derogatory items get deleted. And when they get deleted, it improves our client scores dramatically. Yes. Any other tips that you could give our listeners on? We agreed that the number one thing is basically pay your active open bills on time.
Oh, yeah. There's a lot of people are also going to think that they have a bigger score or a bigger payment history than what they think they do. They think they have a bigger one than what they actually do because there are a lot of things that they're paying every month. They paid it every month. Well, I don't know why that's going to affect me that much. I pay my rent, my utilities, all of these things, my cell phone, my water, all of that on time. And what they don't realize is that, quite frankly, that doesn't report positively to you. Now, here's the problem: if you miss a payment on your electricity bill, what are they going to do? They're going to report you, right?
Yep.
They're going to close it if you don't pay it for a couple of months, and they're going to report you. But they're not going to report anything that you're paying it on time.
Yep.
And so you really need to look at your credit report and find out what's there.
Yep.
And find out how much that does affect you.
And speaking of that, let's say we have some listeners out there that when we said they need to be paying all their active open bills on time, let's say they are there. But little do they know that all your active open bills, you need something that is reporting to the three major credit bureaus.
Absolutely.
If they don't have anything that's reporting to the three major credit bureaus, what should they do? What can they do? Someone that has less than perfect credit, right?
Right.
They're paying all their active open bills that are not on the credit report on time. They're paying their rent on time, their gas, water, electric on time, right? But they have nothing reporting to the three bureaus that's actively open. What should they do?
There's a couple of options that you can do at that point. One of them I would recommend, first thing, don't get any hard inquiries to start with. You don't want to go around and put in a whole lot of requests for credit cards. You know, you go to Target and they say, hey, I'll give you $50 off of it if you get approved today for a Target card. I wouldn't do a bunch of that, because if you get 4, 5, 6, 7, 8 of those, well, you're already starting hurting your credit. So I would look at going one or two ways, or maybe actually both. I would look at getting a secured credit card. And what a secured credit card is you're going to hand them a deposit. It could be $200, $300, $500, maybe $1,000 or $2,000, depending on your means. And that's going to be your credit limit. A lot of times, if you look at them right, they don't hit your credit at all. And after a year, they're going to give you your money back, and it becomes a normal credit card at that point. I would do that. But another option is, if you've lived in the same house for, say, 2, 3, 4 years, go to one of the sites that will allow you to. And if you come on the MSI website and go into our resources tab, you can actually see Rock the Score. And we have them. We're going to have another one soon where you actually can pay a fee and have 2 years history in arrears for your rent and your utilities to show up on your credit report. So now you have 2-year history across the board, and that's already going to give you a jump if you don't have anything now.
But big disclaimer on that, if you have paid your utilities late, if you've paid your rent late, definitely don't do that, because then that negative payment history will go on your credit report.
Right. That's the reason I said there's 2 ways to do it. And really the 2 ways are doing that and getting a credit card, or just getting the credit card. Because if you paid everything on time, it's a no-brainer to do it. But if you have a lot of late pays that you know of that are going to show up when they go searching, leave it alone. Don't go and hurt yourself in the process of trying to fix it.
And great information, and thank you for that, because a lot of our clients, they come to us and they have nothing open, and one of the reasons why they don't have anything open is because they've been applying at the wrong places. They've been applying for an American Express card, right? They've been applying for a credit card that's going to start off with a $20,000 limit that has a bunch of rewards points, right? They have to crawl before they walk. If you have less than perfect credit, step number 1, if you have nothing open, is open up a secured credit card. Yes,
sir. Absolutely.
Everybody gets approved typically for a secured credit card. And if you happen to get denied for a secured credit card, you can go to our website, to the resources tab.
Absolutely.
And we have a couple of secured credit cards there where you are guaranteed not to get denied with those secured credit cards that we have there. And our site is msicredit.com, and then just go to the resources tab. So, great information. Any other tips that, we could go on and on.
We could go on.
Maybe one more on how to improve your credit score.
How to improve your credit score. One other item that you can do. Let's say, if you do have credit cards, let's say you already have some credit cards, not a lot. We talked about the people who have nothing at all, but let's talk about for a moment the people, maybe I have 2 or 3 credit cards, right? And I want my score to go higher. Well, part of your score is how much limit you have versus how much you're using. And one of the easy things to do is call out to your credit card companies. You want to ask a question, and it's simple. Can you give me a credit limit increase without a hard credit pull? And we can go deeper into that in another episode and really get into that. But the first things you would do, if you're looking to get a fast increase, probably one of the easiest ones to do. You got a $500 credit card and you have $250 on it. Well, if they increase it to a $1,000 credit card, you go from 50% utilization to 25%. Your score's going to jump immediately, and you didn't pay anything.
That's exactly where I was going to go. And what I do, that's great advice. I actually have an alarm every year, right? The alarm goes off on my calendar, and it basically says, call my credit card companies to ask for a credit limit increase. And it's funny that we're talking about that today because that alarm went off yesterday. And
it's about that time.
One of my wife did it as well. We're both doing it at the same time. She got the biggest increase. She had a credit card with a $21,000 limit.
Yeah.
And they raised it yesterday to $35,000. And exactly like you said, just from her doing that and them raising the limit from $21,000 to $35,000, that increased her credit scores. Why?
Oh, yeah.
Exactly what you mentioned. The credit utilization rate, right? $31,000 limit, $0 balance looks better than $21,000 limit with the $0 balance.
Absolutely.
Yep.
And that balance, that extra $10,000 also helps balance out things like your car, any personal loans, student loans, those type of things. It helps balance that number out.
Yep.
So you get a bigger disparagement between how much you have in total credit versus how much you could. And it looks good for you, absolutely,
Yes,
without a
yes.
doubt. Welcome back to MSI Wealth Chronicles. And we're talking today about your credit scores. What is a credit score? We're talking a little bit about the number one items that you should do to start working on your score right now. Now, you were talking about something a moment ago, and my brain just slipped on what it was.
Yes. Well, it was about a credit score. What is a credit score?
Oh, okay, yeah.
And to me, the definition of credit score, right? You could go multiple ways, right? It's basically a 3-digit number that agencies calculate, and there's a lot of factors.
Right.
There's a lot of factors that calculate your credit score. But lenders nationwide look at this number. The number typically ranges from 300 to 850.
Yes, sir.
And basically what it does is it calculates our risk factor. How likely are we to default if, that line of credit is given to us? The lower that you are, the higher risk you are to default.
Right.
The higher that you are, we all know this, the less likely you are to default. Okay. So what would you say? What's your definition? How do you explain, what a credit score is to people?
I actually have found that a lot of people are scared of the term credit score. You will, if somebody goes, I want to buy a house, but I don't want to check my credit. They're afraid of it, right? I want you to change your mindset on a credit score. It's a key. It's a thing. It is a key to unlock a door, and that unlocks the door to the loan officer. If you can unlock that door and get in the door with the loan officer, the chance. What would you say? The number of people that get to you and your wife, because your wife's a loan officer,
Yes,
right? How many people who are able to get the credit score to unlock the door is she able to get a home?
Of people that what?
That have the right score, that have a 58,
90-something percent,
90% something
Yeah.
percent. So it's a thing. And it's not something you should be worried about. It's not like we're judging you. It's not like the world's judging you. It's a 3-digit number.
Yep.
And it's what's used to calculate where to go, And so I like to tell people that your credit score is the key to unlocking doors.
Yes.
And it is something that you can change. It's in your power. Quit worrying about what other people think. Worry about what's on the page, and everything else will come afterwards.
Yep. And we always mention here at MSI Wealth Chronicles, right? It's not about money. It's about empowerment.
Absolutely.
And I strongly believe that it is a bit about empowerment. It is about understanding credit and then making it work for you. Because if you understand what a credit score is, and you understand how it's calculated, right? And now you fear. Now that you know how much a late payment or any type of derogatory item affects you, right?
Right.
Now you know, right? So now you fear ever getting a late payment or derogatory item. So now you pay everything on time. I mean, it's all about empowerment.
Yes, sir.
And so anyways, I want to piggyback off the credit score. So the credit score, we already defined that, what it is, ranges from 300 to 850. And we were saying earlier that the data where they calculate the credit score from, it's coming from where? From the credit report, right?
Absolutely.
And a big misconception for a lot of people out there is what is being calculated, right? What is being used to calculate our credit scores? A lot of people don't know. So we're going to go over both with you guys, what items are not calculated and what items are calculated.
Yes, sir.
And we'll start off with items that are not calculated in your credit score, right? Maybe we could go one and one,
Sure.
right? So I'll start off with ethnicity. A lot of people think that maybe your ethnicity has something to do with your credit score, right?
Right.
And it doesn't. It doesn't at all whatsoever, right?
Nope.
It has no factor at all with your credit. In a minute, we'll go over what items do factor into your credit score, but right now we're going to go over what doesn't. If ethnicity is not one of them, you want to share another one with us?
Another one a lot of people think is, hey, I'm young, I have a bad credit score, or hey, I'm old, I can't get credit, or whatever. Age has nothing to do with it.
Yep.
When they're calculating your credit score, it's a machine, by the way, first and foremost. You should know a human doesn't touch the calculation. Your age doesn't matter whatsoever.
Yep, that's a great one. That's a great one. Another one is if you're employed, right?
Right.
You would think that if you work or you don't work, right, especially if you don't work, that maybe your credit score would decrease.
Right.
But no, that has nothing to do with it. It doesn't matter if you work. It doesn't matter if you're an attorney and you make $200,000 a year. Your employment status has nothing to do with your credit score. Do you have another one? Do you have one more for us?
And just to piggyback on that one, that is actually one of those big myths that you hear. The more money you make, the better off your credit score is. Yeah, no, that's a big myth I hear. Another one that
one more.
One more. You know what? A big subject here in the world right now, which is gender. Whether you're male, female, whatever your choice in life is, and it, good for you either way any way it goes. But the machine doesn't care.
Yep.
And your score is based off of the information on there.
Yep.
Do you know where the information on there? It's not always the same from the three bureaus either.
Nope. Correct. That's why you have three different credit scores.
Absolutely.
The three major credit agencies, right, that calculate your scores: TransUnion, Experian, Equifax. Three totally separate companies.
You know what surprised me about why that is? So what a lot of people don't realize with your credit score and with the credit bureaus, first off, credit bureaus are for-profit companies. They're not part of the government. There is a committee with the government that watches them, but I think there's a committee watching some cat somewhere too, So but if I'm a credit card company and you're one of the bureaus, right? And let's say I'm sending it to you and the other two bureaus, and I want to reduce my costs. I quit sending it to you because you charge me to report my customers.
Yes.
So the reason some of these credit card companies and some of these companies in general, and why your utilities don't, right, is because they don't want to pay all three bureaus on that.
Exactly. Yep.
And so really it comes down to something as simple as saving 30%. If they don't pay one of the three bureaus, and now if you've got one company on or that's reporting to all three, another reporting to two, and a third credit card that's reporting to the other one, you have three vastly different scores.
Yes,
and that's the reason why this happens. And
exactly,
and you can control that. Remember, we talked about empowering, right? Here's a piece of empower. Call your credit card companies. Call your loan companies, ask them to report you to all three, and you could start gaining more control of that.
Exactly. Yep. So thank you for that. So now we covered basically the items that are not calculated into your credit score. Hope, so people learn something new, right? Now let's talk about what data do they actually use from your credit report that is calculated into your credit score. We talked about a major one earlier, which is payment history.
Yes, sir.
How we pay our bills is 35% of our credit score. You pay your bills on time, it helps your credit scores a lot.
Right.
You have derogatory items on your credit report, or you get a new derogatory item on your credit report, it's going to hurt you a lot, right? And there's a couple other areas. Do you want to go over the other areas?
Sure. The second biggest one we've kind of touched a little bit, which is going to be your utilization, or what's a lot of people will call amount owed. It's 30%, and it's your second largest part. And this really comes down to how much credit you have available. And what I mean by that is if you have a $50,000 car and five $10,000 credit cards, you have $100,000 available credit, right?
Yep.
But let's say you have nothing on the cards and you just bought the car. Well, you're at $50,000. You're about 50% utilized, right? That utilization affects you. So the longer you've had like a car or a home, anything that is a month payment and eventually you pay off.
Yes.
The longer you have them, the better your score and the better your utilization is going to be.
Yep.
But the quick fix is actually your credit cards. So that's one of your big items. One of the other ones that I'm actually a little. I got a funny story at some point to tell you, but length of history.
Yep.
Is,
Before you go to let me piggyback on debt, right?
Absolutely.
So payment history, I think everybody made it pretty clear. Pay your bills on time. If you have any derogatory items, do everything possible to try to get those removed.
Yep.
Okay. Debt, right? Real simple. Thank you for the explanation. It was great. But keep your debt low. Real simple. Keep your debt low. If you have credit cards, try to get them to zero, right?
Yes.
Credit cards were never meant. That's a big misconception for me as well. When I first got a credit card, I looked at it as extra money, right? I really did. I really did. Nobody taught me how credit works, right? I wasn't empowered so I could make great, financial decisions. I was empowered with knowledge, right? About how credit works. So whenever I first got my credit card, I thought that that limit that I had was like extra money. So for a little bit, right? That's. I mean, I was spending it all.
Like water.
Yep. But now that I know what I know, all my credit cards are typically at zero. That's where you want to keep them at, because if you don't have your credit cards at zero, two negative things are going to occur. A, we just talked about it. You're going to affect your credit scores. But number two, you don't keep your credit cards at zero, you're going to pay interest. The credit card companies want you to not pay your credit cards to zero.
Sure.
Because as a matter of fact, they're probably begging and wishing that you don't pay your credit cards to zero, because I saw a report the other day, credit cards are at their all-time high with interest rates, right?
Yeah,
they're literally, I was surprised. This should be against the law. They're like at 30%. Credit card interest rates are like at 30%. I mean, think about that. For every $100, think about how much you're going to pay in interest.
How do you catch up?
Yeah.
Paying 30%, and that's a monthly thing, isn't it? I mean, you're looking at 30% on those, and that's it's brutal on that. And another thing, you were saying pay them to zero, right? Mm-hmm. Now, I know there's somebody out there today that says, but you have to have a balance to be able to have a credit score for them to count. That's not true.
Yep.
What he said about what Ricardo says about paying to zero is your best possible option, because if you're carrying money, you're paying money on it, and it's dropping your credit score just by carrying that money from month to month, and there's no reason for it.
Yep, great.
And if you want to buy a house, it could hurt you even more, because it affects how much of a house you can get, because it goes into what your monthly payments are.
Yep. And the next area that is calculated for your credit score, that comes from your credit report. As you were saying, you mentioned length of credit history. Yep.
Length of history. It's 15%. One of the hardest conversations I've ever had to have with somebody was a 65-year-old man who had no credit, and he'd just gotten a credit card, and he's like, well, I've been buying things my whole life. To explain to him, and I finally figured out how to do it, you have the same credit history as a freshman in college. He's 65. That's a hard feeling, because it's not how often you've had credit over your life. It's not whether or not you've had credit at different places in your life. It's how long you've kept an account open.
Yep.
And that's actually, you talked about earlier, you thought it was free money. I did the same thing. We University Center, go down to University Center, they gave you everything, T-shirts, hats, food, whatever, right? I must have got 10 or 12 credit cards. Well, I gave one to my mom, right? And I promptly destroyed the rest of them. I eventually had to pay them all off. But talking about length of history, I got lucky.
Yes.
Because about 10 years later, my mom handed me a credit card back. Said, here's your card.
Oh, nice.
And I went, what's this? And I had no idea what she was handing me. Well, it was a credit card I'd handed her.
Yeah.
And she had kept it because she didn't have credit. My mom didn't have any. I said, in case something happens on the road, keep this, don't use it.
Yes.
Right? And she did. She was smarter than me.
Yes.
And so I got an amazing jump on my credit, because I had that time, a 10-year-old credit card when I thought I didn't have anything at all on my credit. And because of the age of that credit, it affected all the rest of my credit, and is actually what my whole credit, until a few years, and probably another 5 or 10 years after that, what my whole credit was based off of. So the longer you have an account, the better off you are. And they're going to look at your accounts, and they're going to look at your overall length. And what I mean by that is, if I've got 4 credit cards and they're all, and I have, they're all 3 years. They're going to look at it that I have 3-year average history, but they're also going to look, maybe I got one card that's 12 years old and 3 others that are pretty new. That's going to be part of what they're looking at.
Great information. And one thing that I want to add to the length of credit history, 2 tips that I want to give everybody is credit cards. Credit cards are one of the most powerful tools to increase your credit scores.
Absolutely.
And in the area of length of credit history, the reason why credit card is so powerful is how long can you keep a credit card open for? How long can you get worth of length of credit history on your credit report? Forever.
Forever.
Right? You can have a credit card open forever. So in the area of length of credit history, a credit card could give you, 80, 90, 100, 200, however long you could live, right? Months of credit history. But an installment loans are basically student loans, car loans, mortgages, right? Those all eventually end. Sure. I mean, the longest installment loan that I know of is a mortgage.
A home, without
right?
a doubt.
Yep. Yeah. And that's how long typically? 30 years, right?
15 or 30 is
so
what most people do.
So think about it. In the area of length of credit history, you could have a credit card for 31 years. 32 years.
I have a 27-year-old credit card.
There you go. 34 years, 35, 36. And the longer you have your lines of credit, the more it helps you out in the area of length of credit history. Yep. So that's a big tip for everybody. Any other tips that you could think of in the area of length of credit history?
Sure. This goes to the parents, actually. I really want to talk to the parents. If you're a parent, look at me for a moment here, okay? You are what's going to set up your kid's future, right? If you've got a kid 16, 17, 18, and you trust them, make sure you trust them. Put them on 1 or 2 of your Visa, MasterCards, or Discover. Yeah. The reason I say those 3 is because the date you put them on there is not the date that registers on their credit history. The date you opened the account is the date that registers. AMX, this may or may not be true depending on what you have. So I'm not going to say for sure with them, but those 3 do that. Once you get them on a couple of credit cards, let it sit there for about, 30 to 60 days. And use the cards, by the way. Use them every month. After about 60 days, then let them go apply for a card.
Yes.
That will do amazing things for them to help get them started.
Yep, because you have an 18-year-old, you've had a credit card for 10 years, you had them on as an authorized user, that length of credit history goes on their credit report. Yep.
Absolutely.
And I have a tip for everybody here too as well. Make sure you're using your credit cards. Make sure you have some type of activity.
Yep.
It's happened to me. I learned the hard way, so hopefully you learn from my mistakes. If you do not use your credit cards, every credit card company is different, right? Some credit card companies, if you don't use it, they'll close it after 6 months, 7 months, 8 months, 9 months, 10 months. Everybody's different. But if you do not use it, they will eventually close it, and then there goes your length of credit history.
Yep.
So a lot of people like to use one specific credit card. Why? Right? Same reason we all do, is because that one credit card that you use it because maybe they give you the most rewards.
The best benefits,
yep,
right?
They give you better points, right? I don't know, hotel points, traveling
airline
points.
miles, that's a big one.
Yep. So that's fine. You could use the majority of your expenses on one credit card, but make sure that you do put something on your other credit cards. Put small stuff on the other credit cards, right? Put your internet bill on one credit card, your gym membership on another credit card, just your smallest ones, and then whatever credit card gives you the most benefits, use that one for everything else.
Sure. And a lot of people are going to say on that, well, what if I get lost? What do I do? I've got, because right now I've got one card that's got Disney Plus. I got another one with Hulu on it, and I got another one with Netflix.
Yep.
That's all they do. They pay those 3 bills every month.
Yes.
Right? And people are like, what happens if you forget to pay one of those? Put it on auto pay.
Yeah.
Set it up to be auto paid to your from your bank account every month.
Yep.
Once every other month, check to make sure it's paying the right amount.
Yep.
And if you do that, it becomes something you don't have to worry about on a regular basis.
Yep. And do you have any tips for? I think that's a big. Whenever we talk to our clients at MSI, when we ask them, what happened? How'd you get in the situation? A lot of people just forget.
Sure.
Do you have any tips? Maybe you could tell them some of your some of the things that you do to make sure you're on time with everything?
Oh, sure, absolutely.
What do
Some
you
of the
do?
things, one of the things that I do is I went through. It's first realizing you have a problem or realizing you have things.
Yep.
The first thing I did is I went through and wrote down everything I'm paying monthly.
Yes.
Right. And it's the first time it took a little more than it has ever since, because once you put it together, you put it in put it on a document, put it in a spreadsheet, whatever you got to do it with. There's 100 little programs online. A matter of fact, if you're on Smart Credit, one of our companies, they actually have a manager that's free in there.
Oh, nice.
You can put all your bills in there and keep up with what you're paying every month.
Yes.
And I highly recommend start by finding out everything you owe people.
Yeah.
Once you have that, figure out what you're paying them, make sure that you have dates set up on that, and then put it into your, whether it's auto pay through your bank, or if you have something that reminds you, set up reminders to pay that monthly. Because at that point in time, you now have control of it, and you can decide, all right, well, I'm going to knock this off. I'm going to pay this. Also, while you're at it, figure out which ones you can pay off the fastest, and go ahead and start knocking those out.
Yep. Great advice. For me, what I'd like to tell everybody is really, if you forget to pay something, it's because you have no fear for the consequences of not paying something on time. To me, that's the way I look at it. If you truly know how credit works, and you truly know, what forgetting to make a payment on your credit card, on your mortgage, on your car, what it's going to do to your credit score, because now you know what it could do to your credit score, you have a fear of ever paying late, right?
Right.
If you have that fear of paying late, guess what? You're not going to pay late.
Nope.
And I'm telling you, unless you know how credit works, and unless you know what credit could do for you, how it could change your life, how you could leverage credit, right?
Right.
I mean, you could do so many things. You could buy a house from good credit, right?
Yes,
you
sir.
could buy. You could start investing in real estate. After you get your primary, you could get your kids into school, right? And finance their education.
You can help set your kids up with better credit by guiding them through the process.
Yep.
MSI Wealth Chronicles. Nowadays, people are talking a lot about generational wealth. Generational wealth is in being able to help you build your credit history and be able to buy those things that gain value, and teaching your children that. And how do you teach your kids if you don't figure it out yourself?
So, exactly. To me, if you understand what credit could do for you and what, not paying on time could do to your credit score, right?
Right.
When you know those two things, you will never, ever forget to not pay something. You'll always remember. I mean, my wife wakes up in the middle of the night. Oh, did the auto pay on the mortgages go through? She's that freaked out. Why?
Right.
Because she knows how important credit is to us. She knows, she sees how we leverage credit to buy homes, to do different things, right? One of the most recent ways that we used credit, to our favor is we're building a home right now, okay? And so check this out. So we're building a home. We're building a custom home. So we got a construction loan. It'll actually be ready here like in 2-3 months.
I've seen pictures of it. It's looking amazing, by the way.
Thank you. Appreciate that. So check this out. So we're building a home. Right now we live in this current house that we have, right?
Right.
So the most common thing to do is what? We saw a lot of friends do this.
Sell
this home, right? Because watch, we need the money from this house to build this house.
Right.
So what's the most common thing that someone would do? They would sell this home.
That's what I did.
And then now you could build this home. But what are you going to do if you sell your home that you live in, right? Where your kids are at, your family's at? What are you going to do? Go live in an apartment?
That's exactly what we did.
Okay, yeah. Go live
It was a bad choice.
With family, right? And I wouldn't say it's a bad choice, but there's other choices, right? Like, for example, what I did is I got a home equity line of credit.
Right.
We'll get into that a little bit later, but basically it's a line of credit that goes against my equity. So I got like a $350,000 line of credit, okay? Because I have that equity in my house.
Right.
So with that line of credit, I used to build this home, right? And so now my home is going to be ready probably next month. We move into it, right?
Yep.
And now we sell this home. When we sell this home and get like $400,000, from the equity that we have, what are we gonna do with that $400,000? Pay the home equity line of credit. So by leveraging my credit, I didn't inconvenience my family. I moved from this house to this house. When some people don't know about that method of leveraging your credit, what they do, they went to go live in an apartment, they went to go live with a family member, because what they do, they sold their home, and then they went to the apartment with the family member, and then now when their home is ready, now they come over here. So, and that's just one example. There's so many ways that you can leverage your credit. And so back to what I was saying, when you know what credit could do for you and how it could change your life, how you could, change, create a legacy for your for your family, right? When you understand that, and then you understand also on the other side, what not paying your bills on time, what forgetting to make your payment, right? We don't need to teach you with tips on how to pay your bills. When you know what credit could do for you, and you know the consequences of not paying on time, you'll create your own methods of how to remember to pay your bills. And you call me and tell me those methods, right? Because you're going to teach me something new, Everybody has a different way of how they remember to pay their bills on time, right? I mean, mine, I guess I could tell you mine, it comes from that. Knowing what credit could do for me, knowing what not paying my bills on time will do to my credit. I have a fear for having bad credit. So that's my tip, right? But what is a physical tip that I have? I guess you could say, I put all my credit cards, all my mortgages, right, on my favorites toolbar.
Yep.
Right. And almost
that's a good idea.
And almost every day. I mean, I'm maybe because of the fear, right?
Right.
Every day it's like I log in to all the mortgages that I have. Okay, it's paid on time. Okay, next bill date, next due date is March 1st. Okay, that one's good. Credit card. Okay, next payment is due. Okay, March 1st. I literally do that a couple times a month.
Right.
I literally go through all my tabs, my favorite tabs, right?
Just to make it.
Yep. Just,
how long
just
does
to
that
make
take
sure.
you though?
Oh, not long at all. I mean,
that's the
literally.
thing.
Think about it. It's in your favorites toolbar. Literally, Capital One. It's zero. No payments due. Boom. I exit out. Right. What would it take? Literally
30
10 seconds. No,
Yeah,
not
10
even.
seconds,
to open up the URL and then see that it's zero. Exit out. Next one. Discover. Zero. Exit out. Next one. My personal card that I use a lot. Oh, it has a balance. Due date. Okay. Next month. Exit out. I mean, literally, I could get through all the tabs. Mortgage tabs, auto tab, auto loan tab, and credit cards, tabs, URLs.
Yep.
All of them, I could go through them within I would say no longer than 2 minutes, literally, So that's my method,
That's an easy way to be able to take care of things. I mean, you're spending 4 or 5 minutes a month.
Yep.
And that's. I know it sounds funny, but that's the discipline somebody's got to have. You have to have the discipline to take a very small amount of time to make very big changes in your life. And that also is empowerment. Because if you're taking just those 4 or 5 minutes like Ricardo does and going through them all, you know what? I may end up doing this, by the way. Because what I do right now is I have a spreadsheet. And you know me, I'm big into computers. I have a spreadsheet and it sends me messages when everything's supposed to be paid. And it sends me 2 weeks ahead. So I'm constantly getting different messages all throughout the week, right? And it probably would be a faster process to just have one browser and just go across once or twice a week and make sure once or twice a month and take care of it. I like that a lot, actually.
And I'm sure our listeners have their own methods. I mean, please share them with us, so we can share with everybody else. I'm sure, we can learn from the different methods that they have for us, right? There's a lot of creative methods on how to remember. But I mean, I will continue dying behind what I just said, which is, I will die behind that, a thought process, right? Is if you know what credit will do for you. And we're hoping that, from all the education that we're giving, out to our listeners, that maybe it'll do that, right? When you understand how you can leverage your credit and how credit could change your life and how you can make money from good credit, right? How you don't have to have, a college degree to make money from leveraging your credit, right?
There's an opposite side of that that's happening to them right now and they don't even realize it.
And what's that? Tell me.
All right. So the thing that they don't realize is they're losing money right now. There's somebody out there right now that says, "Hey, I have bad credit already. It's no big deal. I can only, it can't do anything else to me." So I want you to realize when credit affects you. When you woke up this morning, you went over, you turned on your lights.
Yeah.
You're paying 3 times what the guy next door is for kilowatt hours. When you got in your car, you're paying a higher interest rate to get in your car if you own one.
Yep.
When you go and you get gasoline, if you're putting it on a credit card, then you're paying more than the guy in the next pump, right? When you go to wash your clothes, when you go to find some place to live, where you live is affected by your credit. Because if you don't have a good enough credit to be able to go live in a nice neighborhood, you have to go live somewhere else.
Yep.
So your entire existence every day, from the moment you wake up to when you go to work to the time you go to bed, what you eat, what you wear, is affected by your daily credit. They give them how powerful an impact that is. The difference between a 600 and a 660 is the difference of paying $5,000 a year.
Yep.
That's going to Bora Bora every year just by increasing your score.
Yep.
You know, that's 2 years and it's a new car.
Yep. Yep.
3 years and you bought yourself a house.
Yeah. Yeah. And I just had a thought, about what you were just saying. I thought of, what's his name? Dave Ramsey. I love Dave Ramsey. I love all his information.
99%.
But there's one thing that a couple of things that I don't agree with. But one of the things that he says is basically pay your home cash.
Right.
How long is it going to take you to save up, to be able to buy a home cash? 30 years probably, right?
Almost the same amount of time it would take to buy it from Home Depot and put it together yourself.
Exactly, And so back to leveraging, right? Leveraging your credit, right? I believe, instead of paying your house cash, right? Leverage your credit, buy a house now with your credit so you don't have to throw money away by renting. Because if you follow Dave Ramsey's method, which is save up money and pay for your home cash, what are you doing while you're saving up cash? Where are you living at? You're living at an apartment. You're renting. You're throwing money away, right? Yeah. But if you leverage your credit immediately because you have good credit, you could purchase, and now, right, you're not throwing money away. So, and the second thing that I don't agree with Dave Ramsey, and then we'll get back on track on what we were talking about. But Dave Ramsey says to close all your credit cards, right? And I don't agree with that. Use them. Why not use your credit card instead of your debit card, right? And now, like we were saying earlier, a lot of credit card companies, what do they do whenever you use them? They reward you with what? With
bonuses,
points, right?
Points and stuff.
All kinds of stuff. Yeah,
things that turn into monetary items.
Exactly. Free money. Person A spends $5,000 a month on their debit card.
Right.
How much do they get in rewards? Zero. Person B spends $5,000, right, in whatever, cable bill, whatever, water bill, just like person A does, right?
Yep.
But they put it on their credit card. That gives them a point for every dollar they spend. So every month, this person is accumulating what? 5,000 points.
5,000 points.
5,000 times 12 months, right? 60,000 points.
That's a flight for a family of 3.
Yeah, every credit card company is different, right? But, for the most part, yes. With 60,000 points, almost with any credit card provider, you could get probably 2 flights, as long as it's domestic, Yep. So, okay, we went down a rabbit hole, right?
We went down a rabbit hole. We were talking about credit history, which was 15% of your credit, right? And that is really how long have you had all of your accounts open?
Yep.
The number one thing to remember with that, credit cards are going to be what affects it the most.
Yes.
And so keep your credit card open. And a side note that actually touches Dave Ramsey on that, if you really have a moral objection to borrowing money from somebody else, go get a secured credit card.
Yeah.
That's your own money you're borrowing against. Now you don't borrow it from anybody. You can still gain that history.
Yeah. I like that.
There are 2 more parts, and I want to talk about credit mix at the end because I've always told people it's a trap. Right? But the other one is new credit, and they're really talking about inquiries.
Yes.
And it's 10% of your credit. Now, a lot of people go, well, 10% of your credit, that's not a big number. That can be a bad situation if you think that way. And how do you affect it is, I talked about it earlier. You're in the line at Target. Every time I'm in the line at Target, whether I'm using a Target card or not, they ask me if I want to run my credit and open up a credit card. I found an interesting fact out. Did you know you can have more than one Home Depot card?
No.
I didn't know that either until they did the same thing. And I said, how many can I have? And they told me 9.
Really?
9. You can have 9 different Home Depot
credit cards with different account numbers
on one person.
That's crazy.
And I'm like, okay. And it blew my mind for a moment. But every time they run your credit, that shows up on your credit score for up to 2 years.
Yep.
It affects you the most in the first year. But what scares me is this. There's a statistic that is a part of the whole algorithm that judges your score.
Yep.
Did you know if you have 8 credit checks in a 6-month period, that it has been proven that you're 50% more likely to go bankrupt in the next 6 months?
Wow. No, I didn't know that. Never heard of that.
So one of the things I tell clients to do is keep that inquiry number under 8.
Yeah.
You don't want to go there.
Yeah.
And matter of fact, you want to be careful about what you do with inquiries.
Yeah. That's what I always tell my clients. I tell them, look, if you don't need it, don't apply for it. Real simple.
Right.
The credit that you do need. You're ready to buy a home. Okay, let them pull your credit.
Sure.
Don't give them a hard time because 10% of your score comes from inquiries, and there's no way around it. They need to look at your credit. You need a car, let them pull your credit. You need a credit card because you listened to the podcast today and you don't have a credit card, and you go apply for a secured credit card and they say they're going to look at your credit. Let them. You need a secured credit card.
Sure.
Don't have any pushback. But if there's items that you don't, if there's credit that you don't need, do not apply for it.
Right.
You're going to hurt yourself, right? Because 10% of our credit score comes from inquiries. Good information. So last section, right? 10% of your score comes from types of credit. Right?
You have credit mix. It's 10% of your credit. And really what you got to understand is 2 things, right? The first one is the 2 types of credit that almost everything falls into, which is your revolving accounts. And everybody, it really is just mostly you're going to see credit cards as revolving accounts, whether it's a store card like Macy's or Target, or it's going to be a major credit card, Visa, MasterCard, Discover, American Express. Those are going to be revolving accounts, right? The easy way I tell people is if you can charge it up, pay it off, charge it up, and pay it off again, and you don't need to do any paperwork, that's probably a revolving account. You mentioned one that most people don't see, which is a HELOC, which is the home equity line of credit.
Yes.
That also counts as a revolving account.
Yes.
The other side of that is installments.
Yes.
And this is going to be your home loan. It's going to be your auto loan, student loans, personal loans, things like that. Anything you're going to pay month over month the same amount.
Yep.
And at the end of it, it goes away.
Yes.
Right? All of that said, Mix of Credit says that according to studies, 3 revolving accounts to every 1 installment. So if you've got a car note, you should have 3 credit cards. If you got a car and a house, you should have 6. However, don't go buy a car because you have 6 credit cards, because you will ruin your amount owed of your credit, which is 30%, to get 10% up. That's a loss.
Yep. Yeah, that's great advice. That's what I tell all of our clients, right? Is 10% of your score comes from having a healthy mix.
Right.
The bureaus, the agencies, they like for you to manage both. That's what it comes down to.
Sure.
They want to know that you can manage both types of credit. A credit card, revolving, and then installment, right? Vehicles, mortgages, and stuff like that. But just like you said, great advice. If all you have is revolving because you have done great, you've paid off your vehicle, maybe you paid off your house as well.
That happens.
You've paid off your kids' student loans, right? So you have no installment. Don't go off and get into more debt, right? When you've achieved such a big achievement, right?
Right.
And don't go get in debt just because you want to get this extra 10% of your credit score by having a healthy mix, right? I always tell people this, and that might not be you, where your home is paid off, your vehicle's paid off, right? Your kids' student loans are paid off, right? And maybe you don't have any installments right now, but you do want to buy a car here soon. You do want to buy a house eventually. It's in your future, right? I always tell people, your installments, don't force it. It'll happen organically.
Sure,
if you don't have a house,
absolutely.
I'm sure you're going to want to buy a house.
Right.
If your car is paid off and maybe you don't have the means to pay for your next car in cash, there you go. You're going to want to finance another car here in the future.
Right.
So your installments will come organically. Just let the installment loans happen organically. Don't force them. Don't force them.
And
there's no need to force it.
That brings back to tying back to the beginning of this. when we said one of the most important parts of your credit is your credit cards that affects you. If you have a good, solid, long history, you've taken care of, so you got a good amount owed, you've paid all your bills on time, which is your payment history, right? And you've got a good set of credit cards that you've done the right things with, the installment loans can happen when you need them.
Yes.
You want to go buy a new car, the opportunity's there. You want to go buy a new house, the opportunity's there.
Yes.
That's not always true the other direction around.
Yeah.
You know, so it really is. You know, like you said, you know, don't go chase that mix of credit. I do recommend the other things we talked about in the other parts of the credit today. But like I said, that one's a trap to me. And everybody thinks about it first, and I don't know why.
Yep. But yeah, thank you very much. It's great information. Hopefully, our listeners, hopefully they got one nugget or two or whatever.
I did.
Right?
I got at least two today. I'm going to use that tab thing. That's great.
Yeah.
Or to kind of put everything together, right? Remember that if you're new to credit or you're trying to build your credit, you're trying starting out, you know, you got to pay all your bills on time, right? That's going to affect your payment history. That's the first thing. If you don't have that in place, nothing else is going to work. So start there. Build a budget. Find out what all you owe. Then build a budget. Start paying everything on time. Live within your means. Live within your means and have money left over. That's more important. Once you get there, you're going to want to get a secured credit card. You're going to want to get a credit card. If you got a family member that can put you as an authorized user, do that, because at the end of the day, if that can help you out along the way. And then it's about paying things on time, keeping your credit cards as low as possible. You know, get monitoring so you make sure, as your credit score goes up, you know, that's when people start trying to steal your credit. Your credit. You should get monitoring at that point.
Yes,
you know what I mean? Just as a side deal. And if you've got anything negative, that's where you've got to reach out. And I will tell you, chasing the negative items is where you need to reach out to some place like MSI and have somebody audit all of that. You're not auditing whether or not it's yours. What you're auditing is whether or not that's supposed to be on there at all.
It's reporting.
If it's reporting right, if it should still be reporting, all of these things. There's hundreds of reasons why it's not supposed to be on you. Make sure you're getting the best out of that. And that's kind of, pull it all together. That's the basis of what we were talking about today is how to start the process of controlling your future.
Thank you for watching MSI Wealth Chronicles, building legacies one episode at a time.
We appreciate you watching today. We hope you come back and watch more. We have a lot of tips to help you out in the future. If you have any questions or you want to hear about something you don't know about, or maybe it's something that you've always wanted to ask a question about credit, please put it in the comments below. We'd love to hear what you're thinking about, because at the end of the day, this is about helping you out. Thank you.
Thank you.